I would love to also invite one more very important person in this morning's discussion, Kevin Lam, the Group Chief Executive of Hong Leong Bank, to come and join us on stage. And I would like to thank Hong Leong Bank for supporting us and being the host bank for this year's summit. And adding Kevin into the discussion helps us to contextualize the discussion for the practitioner, all of us who are bankers. So let's get right into the conversation. Patrick, now that we've got you on this seat, we love gossips in Malaysia. We love getting the...
We love gossips everywhere in the world.
Absolutely. Yes. And especially what's going on in DC right now. And I think the best way to capture an essence of what we need to take away from you today is maybe to ask you this question. When you became chairman of the House Financial Services Committee, the Democrats had done a bad job, haven't they? Leading up to the time of the Republicans coming into the market. And I'm not saying this just to stir up the pot, but you had all that mess on the cryptocurrency regulation, Gary Gensler going AWOL, and the lack of clarity on digital assets. And also, very interestingly, something that maybe we didn't get a sense of here, the lobbying the big banks did in the U.S. To have legislation, pivot in that way. What did you inherit when you became chairman of the Financial Services Committee?
A mess. So a couple of things happened. Number one, President Biden campaigned as the type of senator he was, which was a moderate Democratic senator. Left of center, but not progressive. And progressivism is defined by the far left in the United States. And so then Vice President Biden campaigned as a moderate. Once he got elected, it became apparent that he made two deals to get the nomination. One was with Senator Bernie Sanders of the socialist stripes of the Democratic Party, and that was around spending. And so what he wanted was President Biden to use this opportunity coming out of COVID to to greatly expand the U.S. government for us to tax and spend more. And so two of his significant pieces of legislation he submitted to Congress were to extend spending in a dramatic form, which he largely kept his promise to Senator Sanders. The second was less evident, but it was that Senator Elizabeth Warren, who came to power as a result of the financial crisis and used populism against banking in the United States as her political power. She got Vice President Biden to agree to adopt her policies for financial services and to mergers and acquisitions, to antitrust policy. And as a result of that, she got the appointments to these significant pieces of power in the United States, which meant instead of having a reasonable regulatory approach to digital assets, the Biden appointees stubbornly refused that. Even though the rest of the world had moved forward, even though, in Asia, most economies had a view of how to incorporate digital assets, even though the Europeans had a view to adopt digital assets. One. Two, antitrust. Elizabeth Warren got her person as the head of the antitrust review, which then blocked major acquisitions and mergers in the United States based purely on policy changes rather than data describing what is an antitrust violation. Those were two areas where President Biden was most unpopular during an unpopular presidency. And so what we've seen as a result of that, and what happened during my leadership of the Financial Services Committee, is we built bridges to say, this is a terrible idea. The policymakers on Capitol Hill are far more reasonable than what the Biden administration was doing, and we're able to bring them over to a reasonable set of policies. And the high point of anti-bank politics was the Federal Reserve's additional capital requirements, the Basel III, so-called Basel III endgame, that Elizabeth Warren's chosen person at the Federal Reserve was pushing, Michael Barr. And when the banking industry in the United States said, we will sue our regulator, that changed the discourse. When we on Capitol Hill, with bipartisan support, both parties supporting digital asset regulation and payment stablecoin regulation, those three marks, I think, describe the end of post-financial crisis politics in the United States and an openness to a forward-looking set of policies rather than being rear-facing. That actually then brought in this new group of President Trump's appointees to implement these policies. Final piece, and I'm sorry to go on so long.
Keep going.
Artificial intelligence. The large labs, the LLMs, with new models led by OpenAI and ChatGPT. The Biden administration had a view that it should be the executive branch, it should be the presidency that determines whether or not these models can be deployed to the marketplace, which no law permits in the United States, number one. Number two, it would be distinct from every technological deployment that we've seen since the founding of the United States, a marked change. And the Biden administration called this the diffusion rule, which would be that the president would decide what models get deployed, diffused into the U.S. economy. This was the point where Silicon Valley said, we simply cannot have another term of President Biden and his policies. That, plus digital assets, plus antitrust, was the driving force of shifting moderates in the United States that helped Biden get elected and shifted them away from his party to President Trump and built a new coalition for President Trump's second term in the presidency. Markedly different coalition, expanded coalition than his first election in 2016. But as a result of the malfeasance and incompetence, and I would say very bad politics, misreading of the politics that the Democratic Party had in the United States. That was an opening for my party, yes, but we'll see how long that opening lasts. In the current set of politics, there is nothing permanent about the U.S. Governing coalitions.
Okay, let me add to the fire. Okay, you are not also a fan of the Dodd-Frank Act. And in fact, you worked very hard to dismantle a lot of the elements. By the way, Barney Frank was on this stage several times in the past, and we've always had arguments as to how big an institution has to be before it's systemically important. And it was like a number plucked up from the air kind of thing. But what specifically about the Dodd-Frank Act that you'd like to see dismantled over time?
Well, first of all, what is systemically important and what is large are conflated in the U.S. regime. And in every regime, we have special numbers. Every country in the world has a special number that is significant to them. In the United States, these tend to be 5, 10, 25, 50, and 100. Why? I don't know why, but they are. And so we get into regulatory conversations of what makes sense for regulation. And instead of saying, well, we need to see the connectivity of these institutions, if the institution can fail on a Friday and we open up Monday and we have a different name on the institution and there is no broader contagion, that seems like a low-risk situation. If you have a small institution that has massive capacity, perhaps banking every venture capital firm of any significance in the United States, one. Two, a significant holder of payroll and payroll checks, perhaps they should have a higher regulatory burden than a bank similarly sized that does not have that type of importance. So Silicon Valley Bank did not get enhanced supervision, but peers, but slightly larger, but peers that were not systemically important, though larger, had heavy regulatory burdens to no great effect. So the arbitrary nature of these decisions on regulation, that is, I think that is negative. But we are past the reforms to Dodd-Frank now. It is baked into the U.S. system. What we see as a result of Dodd-Frank, though, is more fintechs and more banking that is not through traditional banking rails rising as a part of the marketplace. And this, in some respects, is technology, but in other respects is traditional regulatory arbitrage that we have to be mindful about and guard against.
Okay, this conversation continues, but we need to get Kevin into the conversation. You're the CEO of a regular bank. You've heard the morning keynote speeches, the minister, and now the congressman. What is your sense, or what is your worldview? What is your geopolitics as a CEO of a regular bank?
I think the minister's speech focused on the final part about three middles. Hong Leong Bank is exactly in the middle of the middle. We see ourselves as a middle-sized bank. And to Patrick's comment about the Dodd-Frank Act and how we always talk about scale in banking, right? So as a middle-sized bank, we are always looking for scale, how we can achieve greater scale, because we're looking for economies of scale to drive down our cost-income ratio and be more efficient at serving our clients. But at the same time, when you're too big, then you're dealing with regulations of too big to fail. So that, I think in a sense of, it's a balance that we're trying to achieve all the time. So as the CEO of this bank, I think one word comes to my mind, it's balance, right? And bankers, we always have to balance risk and return, being too big and being too small, right? Balancing the East and the West, balancing investments and costs and all. So I think for me as a CEO of a bank here in Malaysia, where we're trying to become more meaningful, more significant, outcomes are important, right? Because we hear a lot about ideology, right? There's every word in speaking about the New World Order. We look out for what happens tomorrow and Friday when the two big men sits down and have a talk. But whatever the outcomes, right, the middle powers or the middle nations or the middle companies, where I think many of us in the room are in that middle of that bell curve, we have to look for the right outcomes, right? And we want to do good to our customers. We want to deliver for our shareholders. We want to do right by our regulators, right? But I think there's probably maybe a bit too much discussion on ideology, or there's too much discussion about the East and the West, and this is right and that's not right. But the outcomes, I think this is what people like us, we're looking at delivering for all our stakeholders. Are we able to give better jobs for our colleagues, right? On your theme about AI banking, right? We were having a discussion with my new board IT committee. We had a new chairman just came in to chair this committee. And we were discussing about AI. And the big theme was, what is our AI strategy? Because we have been deploying AI quite a lot in Hong Leong Bank the last couple of years. But it seems to be now like let the flowers bloom, right? It's been happening across the company. But we're getting to a stage right now, we call it another level of maturity, where we have guardrails, we have responsible use of AI, and that is actually the main focus right now. So it's really proliferating within a company. But that brought the discussion to people. we got the sense that an AI strategy, if we had to articulate it properly for the bank, is a people strategy. We actually, I was just taking note, right, since I joined the bank 3 years ago, the total headcount of the bank actually decreased while number of clients increased. It's not something I'm proud of, actually. But the reality is when people left the bank through resignations or retirement, there wasn't a need to replace anymore. We actually could get AI to do a lot of stuff. And that number is not in the thousands yet, but it's in the hundreds. And we're probably a bank of probably about 10,000. So that number is not small. It could be bigger. We could accelerate even more. But with the whole social structure of, the job, the resilience for the jobs of people, what do we make them do in the future, right? We've made their jobs redundant. How do we retrain them? So I think to the point about how AI is growing faster than anything else we've seen, right, in humankind history, the people strategy, I think, is not catching up. We need to look at how to prepare our colleagues for those changes and retrain and redeploy. I was just pressing my human resource director, says all these people that are now in the, we don't call them redundant pool, but in the available pool, right? What jobs can we give them? How do we move them quickly into new things? So a middle power, a middle nation, a middle company is grappling with all this stuff.
If Kevin was a bank in the US, he would be an average community bank. The nice thing about being in Malaysia is that he's got one regulator to answer to, the Bank Negara, central bank. If he was in the US, he was going to be besetted by OCC, FTC, FDIC, right? On and on and on.
Keep going. There are more.
Right? And then personalities within each one of them. I think Michael Barr wouldn't be very nice to an average commercial bank in the US going through these transitions. He's got his own, agenda to build on. How do we make sense for those of us who are outside the US of how it all eventually comes together?
Well, each administration is different. But in the United States, the Federal Reserve has a significant leadership position. And so you look to the Federal Reserve to set the tone for what the other regulators are doing. So that there is more clarity if you're a U.S. banker on the direction of policy than what is evident from outside. It doesn't mean it's not complex, but it is a level of complexity accepted by the market right now. What we see now, and what we've seen as the result of, let's call it the last 20 years, is that these federal regulators are more harmonious in their approach. And that is, they go in one direction or another depending on the administration. And you can ascertain broad themes around this. With this current leadership group in the Trump era, the Treasury is the dominant voice here. And Secretary Bessent has a significant leadership capacity and is using the federal banking regulators as a subset of Treasury, which is markedly different than previous administrations. We will see more of this in the coming years in the United States. That should be assumed as the next norm in the United States. So when you have an administration like a Biden administration, it will be monolithically very leftward focused on progressive policies. And I think you could see this thematically, and I think you'll have more clarity about that. But this will have more impact based off of elections on these regulatory changes at these banking agencies. That's for sure.
So what you're saying is that banking is being politicized because the Treasury represents the executive, and you have the career technocrats having to put up with the agenda of the Treasury, the outcomes that the Treasury has in mind. So an average bank like Kevin's, the outcomes that he's talking about, he has to, succumb more to the to the political agenda rather than to the structural business of being a bank.
That is inevitably the case with the American system. It is more so now for two reasons. One is the politics, the domestic politics in the United States and globally are more populist in nature and less ideological in nature, one. And then two, particular to the United States, is that the United States has three branches of government and divided power. There have been major court cases over the last 10 years, I would say even further back of 20 years, on the approach to regulation in the executive branch. What we created from 1890s through, I would say, Dodd-Frank, was expertise in independent agencies. What the U.S. Supreme Court has ruled over the long run, not simply at the behest of Trump, but President Trump has been the beneficiary, his administration has been the beneficiary of this, but the courts have ruled that there is no such thing as an independent agency, that the president can hire and fire the heads of these agencies. That is markedly different than what we've experienced before. The one exception, and we will see this in a Supreme Court case very soon in the coming months, is on the nature of the Federal Reserve, that the Federal Reserve is a special and distinct institution that has special and distinct powers, but no other regulators are similarly situated to the Federal Reserve in the U.S. system. That is very different than what we've experienced since, frankly, since Woodrow Wilson and FDR were president. Markedly different, which means these elections will have more dramatic impacts on regulatory policy for banks and for every other industry in America.
No, the American system is obviously one where I really sympathize with the banks over there. But to speak a bit about Malaysia here in Southeast Asia, I have my chairman of the Association of Banks seated over there. He bears the brunt of a lot of the powers from above that comes. And in our Association of Banks, and maybe this is useful for, we understand we have delegates from Africa, from Central Asia, other parts of Asia that come, to have a simpler structure, right? That there are about 8 major banks here in the ABM, Association Banks of Malaysia, and about 5 foreign banks. And many of my colleagues are here today as well. And it's, we compete like hell with each other. But at the same time, right, there is understanding that the roles of bank, right, is to say, you call it, is a vehicle of transmitting monetary policy into the country. So we understand that role very well, right? And we know that we have to be accountable to our stakeholders and our customers, but at the same time, we have a role to serve public interests and the rakyat. We call it the people here. So I think through this coming together, right, competing, but yet at the same time collaborating amongst the banks for, again, a middle nation might be a better model than the complex one we see in the U.S.
I would not recommend our regulatory regime as a good export. I do think that there is massive power for nation states that get regulation clear, consistent, and reliable. And the reliable one is a period of time, right? That's how you build trust. And the deployment of capital will go to those regimes, go to those nation states that are able to build that. In the United States, we take much of that for granted, frustratingly so, for me as a policymaker and for somebody who wants economic dynamism and real competition. This is a huge barrier in the American
right.
system.
I mean, my first 10 years of my career, I worked for American Bank. I worked in the United States banking as well. And the benchmark of governance has been, the Americans, we've been, learning from them. But you rightly pointed out that stability. I also spent about 5 years in Indonesia, and there was a time when between Bank Indonesia and they call the Financial Services Authority, OJK, had swapped powers between each other. right? It was all in the name of, governance, but now Indonesia is going through a very hard time right now because of that stability factor. And it all comes to policy making, it comes to politics. So bankers, we watch, we read the tea leaves and we watch what's happening all the time, right? But I think the thread that links us all together is that we are trying, other than making profit and achieving our political agenda, to serve the public interest. If we can find that common ground, I think we can make things move forward, even complicated things like AI.
For the sake of completeness, Patrick, the role of big business, the influence of big business on financial services. Even today with AI, Anthropic says that 50% of its income comes from financial institutions. So they're going to have try to have a say in shaping how financial services uses AI, and what's allowed, what's not, and they would come through the back door to try and influence policy, influence legislation. How much of that have you seen in the time that you were chairman?
Well, look, in technology, there are power laws. And in the case of AI, we're going to see this more so. There are going to be extreme winners. Anthropic is the current best representation of that. Anthropic had a noted meeting with the United States Treasury. Both Secretary Bessent and Chairman Jay Powell of the Federal Reserve met with Dario Amodei, the CEO of Anthropic, around Mythos, their latest model, the dangers of the deployment of Mythos, and also the sales opportunity around the dangers of Mythos, if we're going to be honest about it. And so, if you can imagine, the meeting from Anthropic was, we've created this extraordinary piece of weaponry that can destroy you. We also have a product, so we can sell you that, or we have another product that will ensure that that other weapon that we produced can't harm you. It was one of the more insane pieces of technological business state geopolitics I think we've ever seen, frankly. The next meeting was with all the significant, the largest bank CEOs in the United States around Mythos, and then large regulated institutions, telecommunications, energy, all down the line around this threat of AI. So when you have a meeting with your government about a new piece of technology, it is usually restrictive. Don't go too fast, be careful, be slow, be methodical. This meeting and the set of meetings in 1 month's time, actually in 1 week's time in the United States, changed the tone of deployment of AI in the United States. Now it is an imperative from the government that large, complex institutions go fast and go hard. And that is a very different thing we've ever seen in technology, ever, especially for the heavily regulated, very impactful pieces of institutions across our society. So yes, this is a great representation of it. The second greatest representation, most visible to all of us, is right now, in one of our neighbors, you have two of the most powerful leaders in the world meeting. President Trump brought with him a significant suite of technology across the U.S. marketplace of CEOs. Not only did he invite them, they went. And they thought it was in America's interest and global interest and their direct business interest to be there. The conversation between the United States and China is far more dynamic, far less ideological, and far more practical than what has been given credit for the conversation, best represented by those CEOs in attendance with President Trump. So yes, Geopolitics is ever present, more so now than ever, and banking more so than the average.
Which then begs the question, because the US dominates global payments, de facto, I think I said this in my first book, that the dollar didn't become the global trading currency because of design. It came because of geopolitics outside of the US. The US didn't care that it became a global currency, but today it is. And now that it's a global currency, this whole initiative or drive to politicize it, to weaponize it, to use the global payment systems to pursue policy objectives, how far can the US go with that? How far the US wants to go for that, because there's a trade-off. Many of the speakers this morning were talking about middle countries, about a fragmented world order. It's no longer a G2 world going forward. And any number of players are looking for alternatives to the dominance of the dollar. So where's the thinking on that? And what do you see in terms of a global structure where the dollar and the US still dominates?
Well, just as I said, regulators across the globe have to have sort of three parts to their approach, right? The United States has to be careful about being the global reserve currency. Careful because since 9/11, the United States has weaponized its capacity in a very frightful way for global connectivity.
Those are your words, by the way.
My words. These are my words at home, and they're my words here. Very consistent. We've weaponized this tool to the detriment of global connectivity, and I would say to the detriment of economic policy in the United States. Interesting that those two things do sync up, that they are globally impactful, but locally impactful as well. There is concern among both parties in the United States that we are going too far with weaponizing the movement of money, anti-money laundering rules, and trading restrictions and targeting of firms. There's also concern of policymakers that we've not made these rules clear and implementable, which has then bifurcated the world between those that want to touch U.S. dollars and those that don't. The final piece I would say is the reserve currency status of the United States matters if we are an economic partner, and the leading part of our economic policy is through financial services. But none of that matters unless there's real connectivity globally on trade. And without that global connectivity on trade, this is sort of a dead letter, in my view. So there is a view among American policymakers that we have to dial this in correctly, be more consistent, and ensure that in a very competitive world where there are new payment rails around U.S. dollars, that we be mindful and engaged there and not simply bifurcate the world between China and the United States on payment rails.
This conversation is going really well, and we can drill down on a number of rabbit holes. But just for the sake of completeness and for helping the discussions going forward, one last question. The pushback on the Clarity Act from the traditional banks in the US, and there's a ramification globally. I think that with regulation, policymakers are actually stymifying the ability of the ordinary person to generate his own wealth in a new world economy where wealth is generated across many new asset classes. In the US, the big banks have pushed back on Clarity because they don't want the non-banks to generate income on the on the trading of treasuries on the back of a stable coin, for example. Is that retrogressive, or is that something that is good for the system, that has stability, that is a system that you still recognize where income for banking is still net interest income?
It is defending a competitive advantage, and that is born out of fear of new technology. And I gave you the statistic that we have half the number of banks in the United States today that we did in 2007, half. So the banking trades and banking industry is trying to fight to keep their members alive and going. I understand that. My message to banks and to fintechs and to the crypto industry is that you all are competing. And the winner are my former constituents, the people I represented. They're real people that get the advantage of faster, cheaper, and better technology. And regulated institutions can either compete and use these new rails for an economic opportunity that they are primed to take advantage of because they have the customer relationship and they have trust. You either drive forward with these new technologies or you get left behind. The market will dictate that. We're not going to let, in the United States, the view is that we're not going to let banks keep a pure advantage without more competition being brought in. And as a result of this, we'll see better transmission of the Fed rate policy and monetary policy because they'll have more means to deploy their policy across society. It has been far more muted because the transmission of rates has not been as diffused across the U.S. economy. It will become more diffuse. And then third, finally, with these payment stablecoin rails, you will see greater global connectivity and a seeking of more stable regimes for monetary policy. That is not a pure benefit to the United States, but in this next generation, this next generation on payment stablecoins, the advantage will be to the United States on deploying that, but thereafter, it will be a highly competitive world on payment stablecoins and payment volume, and tokenized deposits competing with those payment stablecoin rails as well. This is going to be a fascinating time to be a consumer of banking and to also be a driver of defining what is an AI bank with these new pieces of technology in a highly competitive world. Absolutely fascinating times.
You've thought it through all, and then you retire. What's wrong with you?
I don't have to tell you that domestic U.S. politics has been rough. It has been rough in the United States. So I was honored to serve and honored to get out and have the opportunity to keep furthering these policies, yes, but also get a slightly more balanced life.
For the moment.
For the moment.
Let's give the last word to Kevin. From all of that you've heard, in terms of the opportunities in technology and the risks in technology, how are you going to play your cards? And then we'll ask Gordon to sum up the event for us.
So definitely, in a word, quantum opportunities. We're not talking about 10, 20%, right? It's order of magnitude. But it has to be, go back to the right outcomes, right? Aligned for all, primarily our customers, our shareholders, our regulators, right? And we get that alignment correct, then that's quantum opportunities.
Okay, it's working. I always have the pleasure of summarizing the meetings, and this time it's particularly difficult because we have very different perspectives. And let me try and put it in that way. There are two worlds also sitting on this stage. There is the fundamentally individualistic world of America, which I would argue is getting more and more ideological. MAGA, national, security, all of the things, power playing. And against that, we have a middle-sized ASEAN or an Asian country that is actually doing very well. And because Asia and the ASEAN countries are based on commonalities.
Closer.
Sorry?
Closer.
Closer. Based on commonalities and working together. America is fundamentally individualistic competitive. So the banks are worried about, AI taking their business or crypto. In this part of the world and with middle economies, that is not so much a worry. Because of that, it seems to me what I hear is that the middle economies have actually made some advances and are maybe a little bit ahead. And as one of our former colleagues, Mark Carney, now Prime Minister of Canada, said, we have to look at the world from two perspectives. It's not America, China. It's the big ones against the middle-sized economies. And the middle-sized economies increasingly have an advantage. AI or AI native intelligence is inevitable. Crypto is inevitable. Change is inevitable. The question is only who is going to digest it better. And what I hear and how I would see the summary is that the middle income or middle economies may have a better chance of adapting and regulating in a more communal and rational way, whilst America will continue to play the geopolitical power game. Unfortunately, you will be not part of that. But, and that to me is very interesting. The pendulum may be swinging back to the success stories. You remember the tiger economies in the 90s where everybody looked to Asia. I think increasingly, particularly in a country like Malaysia, these countries will have a great opportunity of circumventing all the problems and the politics and the weaponizing and actually coming up with rational solutions. So my conclusion would be, you all are in a very good position and you should not worry too much about the regulations. It doesn't need that many regulations. The security aspect, yes, and some of the responsibility aspects, but it doesn't need that much regulation. And Asia and ASEAN countries, or also some in the Middle East, when they stop throwing the rockets, are actually in a very, very good position. And so to me, this was very positive. And I think that America is actually also coming around more or less to recognizing some advantages of being nimble.
So, ladies and gentlemen, this conversation continues in a private conversation with the CXOs, with Patrick, and also some of the speakers that we have in the next 2 days, with NVIDIA, with the Minister of Digital, and so on. So, join me in thanking our the morning keynote speaker and our host for this conference, and let's continue to have and build on the conversations that we've just started this morning. Thank you.
Thank you to our speakers and moderators for an engaging and insightful session. We kindly request our speakers to remain on stage for a quick photo.